Good morning. Welcome to this month's town hall. Sichuan, can you kindly verify if I'm audible enough?
You are audible.
All right, thank you very much. So I think we'll just dive right into this month's town hall. And on the panel today, moderating this town hall, my name is Cholo Shukupilwa. And our presenter for today is Mr. Kalimake Chaleka, an inspector/analyst coming from the Directorate of Market Supervision and Development. And our topic at hand today is our role in sustainable finance. Just to rephrase that, could be the Securities and Exchange Commission's role in sustainable finance. And before we proceed, allow me to run through our housekeeping rules. We are going to request all microphones to be on mute so as not to interfere with the presentation today. We are going to ask to say, as the presentation is being carried on, in case you have a question, you can kindly use the chat. And after at the end of the presentation, we're going to have a Q&A session where the questions will be answered. Also, allow me to just notify our attendees to say this session is going to be recorded. And also, in case you would want the presentations or you want to follow up on the information that is going to be provided today, we will circulate today's presentation as well. So in line with this, allow me to bring in Mr. Chaleka to make today's presentation. Thank you.
Hello, to share screen.
Apologies, we're having some technical challenges sharing today's screen.
Good day to each one of you, and welcome to our monthly town hall meeting. And we do appreciate you for finding time to join us. So today we will go through the basics of what green bonds are, and obviously speak to what our role is as the Securities and Exchange Commission in the sustainable finance space. So to take you through today's presentations, my name is Kalima Chaleka. I am an analyst as well as an inspector at the Securities and Exchange Commission and part of the team driving green and sustainable finance activities and the agenda at the Commission. So before we set the context for the meeting, and we just want to share with you that first of all, we'll start by looking at obviously setting the context, and then we'll go into speaking to what green bonds are at the basic, because I think this is a subject area that has become quite technical for most of the people, and because it's a new space. So what are these green bonds? We'll also go into explaining the types of green bonds that are there and their relevance to both the investors as well as the issuers, and how green bonds work basically in the capital markets. We look at the role of the capital markets in driving sustainable finance and the investor protection. We also look at the role of different stakeholders, basically and the Commission's ongoing green and sustainable finance activities. And then obviously conclude with looking at the challenges and considerations going forward. So to set the context, the ball rolling, the problem statement still remains right now that climate change affects all of us. And it's important to state that this adverse effect of climate change really has not spared anyone at a global level. And it's important to say that for countries like Zambia, already we have seen economic growth being dropped to almost 50% in terms of projections for this year, 2024, because obviously there are power deficit challenges and upside risks related to that. And therefore, there is now an urgent call to basically mitigate the effects of climate change that's facing, obviously because this will effectively lead to food insecurity and the energy insecurity. So now, as the capital markets, as well as the Securities and Exchange Commission, as the regulator of the capital markets, I think it's important to state our role and then get into details within that space. So obviously what we have at a country level through the nationally determined contributions goals is that we've got approximately 17.5 billion in terms of funding gaps that will relate to both adapting and mitigating activities that relate to climate change. So obviously, for the capital markets, I think we provide a platform for raising capital for companies and projects, and obviously with the full mandate capital markets provides a platform for green financing. And the language itself. That also includes other sustainability-linked financial instruments that obviously the country needs in the sustainable agenda. Now, setting that context, let's get to understand what green bonds are. Having explained that green bonds are one of the products that the capital markets uses to obviously raise funds, financing that would be channeled for green financing, it's important to explain what a bond is. So a green bond are basically fixed income instruments that are used to finance projects that have got an environmental benefit. What you see is that the raising of funds via green bonds is usually done through initiatives like renewable energy, pollution prevention, and also sustainable water management. Important to also state that similar to what we know as traditional bonds, what you see with the green bonds is that these are specifically meant to finance green projects. So the structure is that they are usually defined, they've got a defined maturity, just like the traditional bonds. They pay interest, and you get a return on the principal at maturity. But however, what you see with the green bonds is that the proceeds from the green bonds are earmarked for green projects. So who issues these green bonds? Or in other words, who requires the funds to channel towards mitigating climate finance? So obviously you see governments do issue green bonds. You see corporations issuing green bonds, as well as financial institutions. In terms of talking about the features of these green bonds, what you see with them is that very specific. We talk about the use of proceeds that we shall explain in the next chapters. There's also a requirement for certification, because now international organizations at a global level require that the certification for green bond issuers. There's quite some market growth and demand from investors' perspectives. In terms of the risk and return profile, you see that quite similar with the traditional bonds, but in most cases, you actually see lower risks and higher returns, because then most of those funds that are required to channel to green projects are meant for environmentally friendly investments. There's also increased reporting required within the green bond space, and we hope that then with these requirements, then they will drive the appetite for green bonds. So also just to get an understanding of what types of green bonds we have in the market. So first of all, these bonds range from sovereign green bonds to those green bonds that are issued in a diversified portfolio of certain investment vehicles. It could be in equity, they could be in debt. So what you see is that from a sovereign perspective, these are issued by governments to ideally finance environmentally friendly projects at a national level. You also have corporate green bonds. These are issued by companies to fund sustainable projects, demonstrating corporate responsibility and commitment to the sustainability agenda. You also have green bonds that sit within the municipalities or the councils, as you put them. These are also sometimes called subnational revenue bonds. So these speak to local governments issuing these financial instruments, ideally to the public, for public projects that have got environmental benefits. So what could these environmental benefits be? For example, these could include public transportation, they could include water management system, they could also include improvement in the use of solar instead of the other energy. And then in terms of green bond funds also, we also have investment vehicles that pool capital to invest in a diversified portfolio of green bonds. So that's another type. Now, it's also important to understand the relevance of these green bonds, both to the investor who wishes to put money in these instruments, as well as the issuers. So first of all, it's important to also get to understand that the whole idea for issuing green bonds is to contribute to the environment in a positive way. So one of the key benefits is obviously environmental impact. So what you see with green bonds is that these are usually channeled capital into projects that address climate change and support sustainable development. You also have investor demand. So now green bonds are important because there's increased investor demand. So investors now are requiring actually that their investments are put in funds that are environmentally responsible, and these projects then would seek to provide returns to them. So there's quite some growing interest among investors. Obviously, risk mitigation is also another important feature there. So what you see now is that companies as well as governments that invest in sustainable projects may be better positioned as well to manage risks associated with climate change and resource scarcity. But also from the issuer side, what you see in terms of the importance and relevance of these green bonds is around attracting capital. So an issuer who comes to the market and say they want to raise funds using over a green bond would obviously attract more capital, because then what investors would perceive is that those funds and those proceeds will be used to channel and advance the agenda of climate change. Brand value is a key component. So for issuers that come to the market, they want to issue a green bond, they issue a green bond. You see, obviously, reputation, brand value for organization, because everyone then sees the organization to be environmentally friendly. I think most importantly, also contributing positively to the environment. There's also, I think, the element of potential financial performance. It could be subjective, but obviously what you see is that the more attraction that an entity in terms of having more investors, you actually see that the more money that that entity attracts, you see potential financial performance on that entity, and also perceived lower risk, because then what investors would be seeing is there will be less of any legal or regulatory fines that may be imposed on that entity, and therefore obviously improve the financial performance of that entity. Now, coming to the capital markets, it's important to also understand the issuance process. We've spoken about the issuers. So what you see in terms of the issuance process is that, first of all, issuers would prepare a green bond framework outlining those eligible projects, and those projects are projects that are committed and should be committed to transparency. They then have to also seek third-party certifications. We mentioned about this earlier, I think. So there are organizations like the Climate Bonds Initiative that do this certification, and other organizations to enhance credibility. So that's just one example. And then what you see then is that the bonds then are sold to investors through underwriters, or they could be sold on the open market. A success story now, speaking to the green bonds, is that as a country, Zambia, for example, has had its maiden green bond issuance that was issued in December 2023. It was a 200 million bond program with the first tranche of 54 million that was fully subscribed. This was issued by CEC Renewables under the CEC Group, Copper Belt Energy Corporation. This was specifically within the renewable energy development. So the proceeds from this bond is obviously expected to be deployed towards further solar generation investments within the CEC group. So this is quite critical for them to support their agenda to curb deforestation and also advance the renewable agenda. So that's a success story for a country. Now, continuing with the capital markets, I think it's also important to understand that what is the role of the Securities and Exchange Commission. We already indicated that, first of all, the capital markets are a platform to facilitate these instruments, the green bonds and other sustainability linked bonds. So also drawing you to one of the functions and mandate of the Commission of Investor Protection, what you see from investors generally is that they perceive risk mitigation. So what you see is that in the long term, investors could easily identify risks. the sustainable finance agenda also basically looks at resiliency to shocks. In terms of enhancing transparency, also this is quite important for the capital markets, because what you see is that there is also increased requirement for disclosures. There's requirement for accountability in terms of showing how the entities are impacting the environment through the environmental, social, as well as their governance frameworks. Also, more importantly, I think for investor protection is the alignment with investor values, which we've already indicated that, look, there's increased demand by investors for disclosures in terms of where the investments are going. That would require that championing sustainable finance activities. You actually see more people, investors being aligned to that entity. In terms of what we see within about the regulated framework, so getting back to what is driving ESG and regulatory requirements. So we've spoken about the fact that within the capital markets, we have the securities green bond guidelines that obviously set the standard in terms of the issuance process for a green bond, what is required, certification, as well as the reporting and continuing obligations. But it's also important to understand the elements that are driving ESG, or environmental, social, and governance factors, as well as increased regulatory requirements at a global level. So first of all, the growing investor demand, which we've mentioned, is a key area, because then investors want to align their portfolios with those with their values. So green bonds offer a way to invest in these environmentally friendly projects while they seek the returns. There's also increased sustainability risks that are being perceived now. So an environmental, social, or governance event or condition that, for example, it occurs could cause an actual potential material negative impact on the assets under management that you have, and obviously the future returns that are provided thereof. Another, I think, issue that is really driving the ESG and regulatory requirements is around climate change and environmental concerns. So what we see is that from a risk perspective, there are transition risks that have been seen. For example, you see regulators now coming up with frameworks to regulate this space. And therefore, if entities that are regulated under the different regulators then do not move with the policies, frameworks, or guidelines, they then might face transition. In addition to that, we see physical risk drivers. For example, the gradual changes in the weather is quite a fundamental one, because then these risks could then create financial market losses, specifically around equity, bonds, or even credit market losses. So these could also result from residential as well as corporate and underwriting losses. But also, more importantly, I think at the global level, there's quite some increased considerations in terms of requirements for disclosure and reporting. So what we see is, in terms of the supply chain, because in terms of most companies nowadays, what you see is that they operate in more than one jurisdiction. So in terms of global standards and frameworks, such as the Global Reporting Initiative, These are initiatives and reporting requirements that are synchronized, and there's a lot of uniformity now in terms of ESG practices and reporting. The United Nations Principles for Responsible Investments are some of those global standards and frameworks that are coming up. We spoke about salient features, because then the green bond guidelines really state the standard in terms of reporting. They actually outline what is required in terms of second party opinions, certifications, and continuing obligations. So what you see in terms of the salient features is obviously the use of proceeds that we've spoken about. So this one really guides on the need for issuers or potential issuers to highlight from the onset through a prospectus that the intended use of these proceeds is going towards green projects. And now what you see, green bonds as one of those financial instruments that we see would help to channel these funds into those green projects. In terms of disclosure on project selection process, the green bonds also do guide on the need for issuers to highlight from the onset, again, through the prospectus, how these eligible projects that we'll share in the next slide will be selected, and that is in line with the approved green bond projects. So in the next slide, we'll look at in which classes of green projects the green bond guidelines actually have set a guidance. So in terms of the management of proceeds, you also see the need for issuers being required to highlight from the onset how these funds will be managed throughout the duration of the bond. So from the date the bond is issued up to when it matures, it's important also to keep up to date, to keep highlighting time and again and reporting time and again how these funds will be managed. For example, are there any placements to be made for unallocated funds that are wait to be allocated towards that specific projects that was highlighted at the project selection process? What we also see is from a continuing reporting obligation, there's a need for issuers to also adhere to ongoing reporting obligations, that is post-issuance of that green bond to investors as well as to the Securities and Exchange Commission. So all these are also underpinned by independent external reviewers that are required to provide an independent review. So in terms of the categories and project examples that the green bond guidelines provide, you see the categories within the renewable energy space. So specifically, any projects that relate to production, transmission, appliances or products. Energy efficiency is also one of them. Pollution prevention and control. So there, when you speak about that space, then you're talking about how that project will be able to manage and treat water. How are they going to look at greenhouse gas control issues and soil remediation? Because then that project should be seen to contribute to the reduction of greenhouse gas emissions. Recycling of waste energy, value addition to those products, and so on and so forth. All those sit within the pollution prevention and control. Picking also, I think, in terms of the eco-efficient products, production technologies, as well as processes, what you see there is project examples would be development and introduction of environmentally friendly, eco-labeled or certified products. So this list obviously is not exhaustive, but an indication of the category as well as the type of project examples that sit within its space. So at this point now, we would like to also share with you the role of the different stakeholders like yourselves and the Commission's role in the ongoing green and sustainable finance activities. So first of all, I think there's a broader stakeholder inclusive vision looks at strategic partners, government, stakeholders, as well as market operators or actors, as well as players. And then there's also the strategy around developing the framework. So the idea is the vision, obviously, the Zambia, a global green investment hub. And with that vision, I think what's important is to state that this green and finance, sustainable finance is inclusive. What that means there is that there are strategic partners that would help in terms of providing an enabling environment for products that we've mentioned, for example, green bonds to channel fund green and different projects. What you see is that there are various market players, operators that will be aligned to help in provide sensitization as well as awareness. The Securities and Exchange Commission, obviously, within its powers, also through town halls that provide awareness as well as sensitization on sustainable finance, on what green bonds are and green financing. You also see within the stakeholder mapping activists, advocates, as well as the media. So all these really could help in coordinating, aligning, and providing linkages and collaborations in terms of capacity building, providing sensitization and awareness programs to help foster the mandate and ultimately deliver a vision. Having said that, we would also want to share the different activities that the Securities and Exchange Commission is involved in, as well as undertaking to obviously champion the green and sustainable finance agenda. So obviously, in terms of mainstreaming green into Zambia's financial sector, the Securities and Exchange Commission is a member of the Green Finance Mainstreaming Working Group, which is basically a tripartite of the three financial sector regulators as well as other partners. In terms of the different projects that are being championed there, I think you see the advancement of developing a tagging and reporting system, a green finance strategy and implementation plan at a national level. You see the green bonds market development also being championed there, amongst other projects. The Commission is also championing municipal bonds project, as we had indicated earlier. Municipal revenue bonds are one of the types of green bonds that you see sitting within the capital markets. So the Commission has formed up a task force, which again is multi-sectorial, and developing a pipeline for those bankable projects in partnership with different stakeholders. In terms of obviously contributing at a national level through the 8th National Development Plan, the Securities and Exchange Commission is a member of the Environmental Sustainability Cluster that looks at enhancing mitigation and adaptation within the climate change space. The Commission is also developing a roadmap for nature-related risks. What you see now with increased requirements for reporting, you see the International Sustainability Standards Board issued International Financial Reporting Standards, S1 and S2. So the Commission is actively a member of an adoption readiness working group that has been set up by the Zambia Institute of Chartered Accountants to also just help champion the readiness and also implementation of those two standards, IFRS 1 and S2, that speak to general requirements for disclosure of sustainability risks, as well as IFRS 2 that speaks to climate-related risks. The Commission was obviously a member of numerous other organizations. Some of those are the SBFN, Sustainable Banking and And there's work being done actually there to show progress in terms of what the country is doing in the green and sustainable finance space. The renewable energy business opportunities recently worked with Chemonix International to draft a report that looks at the country's opportunity within this space. So this is a report that will obviously be disseminated to the market in the next few weeks. The Commission is also a member to the African Natural Capital Alliance. This is aligned to the development of nature-related risks within the regulatory frameworks as a regulator. In terms of now concluding, it's also important to share with you that yes, with this journey that we have with the development of the green bond guidelines, with the issuance of a green bond and all the numerous activities that the Commission is involved in, we do see some challenges and further considerations, I think related to green financing, sustainable finance. Some of those include the possibility of greenwashing. So there's also a risk with the increased appetite interest that issuers may exaggerate the environmental benefits of these projects. So clear standards and third-party verifications can really help to mitigate this. Obviously, what you see is within the capital markets in Zambia, the market size and liquidity is still a bit of a challenge, but also even at a global level, what you see is that while the market for green bonds is generally growing, it's still smaller compared to the traditional bonds, which can impact liquidity and pricing. And then in terms of standardization, there's still lack of universally accepted definitions, as well as standards for what really constitutes a green project. And that does also create some confusion and hinder market growth in that space. So this is what concludes our presentation for today. So we will now invite questions from the participants. Thank you.
Well, I thank you very much for that presentation, Mr. Chaleka. I feel the presentation is timely in the sense that the country is now facing El Nino challenges as addressed by the president. Okay, the presentation was exquisite. We have learned a lot of pertaining to what green bonds are. We have learned a lot to why the green bonds are important, the issuance process, the role of the SEC, and as well what is driving the ESG and regulatory factors as well. So at this point, we do open up the webinar for questions and clarifications. We do have a question coming from Mr. Bernard Simwanza. And his question is, what could be some of the reasons why SMEs in Zambia are not utilizing the Lusaka Securities Exchange alternative market to issue green bonds? Your take on that?
Thank you for that question. I think you're rightly put. I think there's a challenge in terms of getting the SMEs, not just in Zambia. I think in a number of jurisdictions, we've seen that the SMEs are really not participating or getting involved in the green bond space. But really, what comes to mind is the fact that, first of all, there's also a perceived, the risk profile of most SMEs is still a bit of a challenge. So it's really a case of saying, okay, even if there's a potential issuer of a green bond sitting there, how is that entity being looked at in terms of how they've profiled their risks and return? So I think there's still some work there to be done. I think there's also the need to also build capacity within, on both, I think, the potential issuers within the SME space in terms of what is required. In addition to that, I think what you see is the issues around the requirements in terms of issuing, for example, not just green instruments, but generally traditional financial instruments. So the SM is able to meet those requirements. So I think that really partly answers the question, but also to mention that the outlook in terms of the amount of work that is going into trying to green SMEs is also quite on the increase. So there's a lot of work, I think, going around within the country and at the global level to try to green SMEs and see how potentially they can get involved from a financial inclusion perspective, because then that speaks to how many of SMEs can come on board to advance this agenda. Next is the contribution from my colleagues. I hope that answers your question.
Oh, thank you for your response, Mr. Chaleka. We do also have a question coming from Chitundu Chisunka. The question is, Chitundu is asking if he is right if he says green bonds are not for individuals, but for corporate entities such as the government. Maybe I'm going to ask Mrs. Leah Simasiku just to provide more insight on that question.
Hello, good afternoon, everyone. Am I right if I said green bonds are not for individuals but corporate entities? Okay, Chitundu, I'm going to answer this from the perspective, unless you want to just provide clarification, whether you mean from an investor perspective or an entity issuing. So if we're speaking
how
about
can an individual buy green bonds? Yeah, so individuals buying green bonds, I think they.
Okay, sorry about that. Yeah, okay, yes. So for green bonds in terms of investing, I think it's open. So for the class of investors, we have two classes. So you can either be an institutional investor. So when we say institutional investor, you can either be an entity that can invest in that green bond. So by investing, we are saying you can give your funds, your savings, your money to that entity that is issuing the green bond, that is looking for that money for that project. Or you could be an individual whom would classify as a retail investor. So we wouldn't say that green bonds are just for corporate entities or the government. When it comes to investing, companies can invest, retail investors, you as an individual can also invest. But when it comes to the other side where you are doing the issuance, usually it would either be a government, like those types of green bonds that Kalima did explain in the presentation, where you have either it's a corporate that's issuing the green bond, maybe it's a municipal council that's issuing the green bond, or an entity. I hope that answers your question, Chitundu.
All right, thank you very much for that, Leah. Mr. Chaleka, a question has been posed. How can an individual buy green bonds?
To answer that, so the starting point, I think, is to, first of all, you need to undertake research. I think it's important because, and that's why I think we're speaking to capacity generally at the market, individuals, companies, regulators. You need to do a bit of research in terms of what green bonds are. And like we say, these are financial instruments that obviously are used to channel funds for green projects. So it's important to, first of all, do research. Once you do that research, you will then need to also identify investment platforms. So you can, even use now, you can look up for brokers, just like the traditional way of investing in securities. You need to out there. And then also, once you find that broker that offers green bonds specifically, or those that also offer traditional bonds, then you need to now engage them in terms of how you open an account. And then you look at what are the specific bonds that really they're sitting with. You also, I think more importantly, need to do risk and return. So this could be done together with the broker to just evaluate the stability of the issuer as well as the potential green bond itself. And then therefore, then the broker will guide you in terms of once you've selected the type of bond that you want. So it could be, like we said, the municipal subnational revenue bond. It could be just a green bond or any sustainability linked bond. It could be an exchange traded funds that is specific to green. So then you then have to purchase that once you've assessed and return that come with that together with the broker. So most importantly, I think is to reach out to brokers who can then guide you in terms of the investment process. And then you also need to just stay informed with what is happening in terms of which instruments in terms of green at a global level are available for you to buy, to invest in, and so on and so forth. I hope that answers that question.
All right, Leah, we do see your hand up. Maybe you'd like to contribute?
I just wanted to make a very quick addition. Kalima has handled it very clearly. He spoke about the need to use brokers, but I just wanted to provide a bit more insight in that you should ensure that these brokers that you're using are actually licensed brokers by the Securities and Exchange Commission. So anyone that would be providing that service to you, which can enable you to make an investment in a green bond in this particular case, you'd want to make sure that you're dealing with a licensed entity or individual that has a SEC license to be able to provide that service to you or provide that investment advice to you.
All right, thank you for that, Leah. Well, we do have a question coming from Hope Mordecai Simasiku, who's asking, how is SEC planning to promote sensitization among the Zambian populace for equitable inclusion of ordinary investors from various population groups? Leah, I feel you can take this question as well.
Yes, thank you. I can take that one. And thank you so much, Hope, for asking that question. So to quickly answer, as the Securities and Exchange Commission, we have a dual mandate. So the Act mandates us to be able to protect investors in the capital market, but it also mandates us to promote the development of capital markets. And under that mandate, Hope, we do a lot of activities that enable us to raise awareness for various topical issues in the capital markets. And I like your question as you're talking about promoting sensitization for equitable inclusion of ordinary investors. And one of the things is that, yes, we have low, firstly, financial literacy levels, but also participation in the market. And as such, the SEC has been very committed to undertaking various awareness activities. And what it has done is to cluster the target groups in two sections. So there are certain activities that we do which are targeted specifically at the children. So games that we do in schools and engagements for children. Then we have the youth. So focus group as a youth will engage them in universities, various sectors. Right now we have a team that had traveled to, is it Northwestern or Copperbelt, where they were undertaking debates in various universities, and all these initiatives tailored towards raising awareness. We also have a target group of the adults, and so those that are working, those that are not, and one of them is this same town hall initiative that we started, I think last year or the other year. So on a monthly basis, every last Thursday of the month, we have this town hall where we are able to discuss various topics in the capital markets just to raise awareness and promote sensitization. So there are a number of activities that we are undertaking in order to raise awareness.
All right, thank you for that, Leah. We do have Wisdom Simula Kalunga, whose question is similar to one we've already answered, but maybe we can add more information. He's inquiring who can access the bonds, which companies can access these bonds for green finance into renewable energy. Kalima, your take on this?
Chole, Kalima is muted.
Yeah, sorry about that. Yeah, so I think the question was answered by Leah, but also just to reiterate that both individual as well as institutional investors can actually access the bonds. But it's important, I think, to look at that process where you need to do research, where you need to look at the risk and return, where you need to engage a broker, and that broker or investment advisor should be licensed by the Securities and Exchange Commission. Obviously, in terms of the companies in the market currently, if you look at, for example, locally, we currently do not have any green bonds available for the public. The one that was issued by the Copperbelt Energy Corporation was a private placement. And we hope then to see a green instrument that will come then to the public. So I hope that answers the question.
Maybe also just to provide some context, Kalima. I think the question was also asking around which companies can access those bonds for green finance into renewable energy. So I think from our perspective, what we've done is to provide the guidelines that will then spell out to you the requirements if you want to come to the market to be able to issue a green bond. So in those green bond guidelines, it also sort of stipulates what sort of projects will then fall into that category that will be classified or seen as green, and then the requirements that you have to adhere to or submit as you are making that application to register a green bond. So we don't exactly say, oh, these are the companies. So it could be any company. The question is, do you then meet the requirements for you to be able to issue that green bond? I know also there's a focus around SME financing, maybe for smaller institutions. And Kalima did make mention of a study that was done with Chemonics to map out some opportunities in the renewable energy sector. And some of those opportunities are directly linked to SMEs. And so there's work also that's being done to see how you can have, let's say, like a fund that can raise enough financing for onward lending or investing into a smaller entity, an SME that is undertaking a green project. So ultimately, the other thing that people would look at is your ticket size, how much you are looking to raise, and then that can also get to provide guidance on how you get to raise that financing.
Okay, thank you very much, Leah, for that. All right, we are going to have our last question, which is coming from Andy Sichilima. His question pertains to investment advisory. Okay, he's saying brokers on the Lusaka Securities Exchange respond to say they do not offer investment advisory each time they are asked about investments on the capital markets. Mr. Kalimo, we're going to request maybe you can provide more information on the role of brokers. We do see the same type of question coming from Chisanga Mwepe, where he's asking where he can find brokers. Yeah, Lee, I do see your hand up.
Thank you, Chole. So I think when we talk about investment advice, this can either be provided by a licensed broker, but we also have specific. Sorry, I'm getting feedback. Is that better? Okay. Yes, so we also have licensed investment advisors whose specific role is to help provide the investment advice on the various securities. When we say securities, these are products that you find in capital markets. So these will be able to provide you with the investment advice that you would be looking for. So if you are looking for investment advice, you'd also just want to consider engaging one of our licensed investment advisors. And how can you access this? I think that was also the question from Chisanga. There are specific places one can find a broker. So when you get to our website, you will find the list of licensed broker dealers and licensed investment advisors that you can then engage, and they would be able to provide the services that you are looking for.
Okay, thank you very much, Leah, for that response. And Kalima, thank you very much for today's presentation. The time is 16 hours. Allow me to close today's town hall and thank everyone for participating. We know we're going to receive questions about sharing the presentation that has been made, and the presentation will be shared. On that note, thank you everyone for attending, and if there are questions that we haven't answered, we have taken note of them as well, and we will share responses to those questions. So thank you very much, and you have a wonderful Thursday. And also for any other questions, please feel free to send them to info@sexzambia.org.zm.